Hi, Assalamualaikum. My name is Syamel Afdal. I'm from Group 1. Our group consists of 4 members, which is Akmal Hazim, Adam Iman, Takif and me.
Hi, Assalamualaikum. My name is Muhammad Syamel Afdal, ID number MDA21070051. Today, I will be presenting about GST and SST process implementation in Malaysia. First of all, what is GST? GST stands for Goods and Services Tax. GST is a multi-stage consumption tax on goods and services. GST is a tax levied on most goods and services sold for domestic consumption. It is a comprehensive indirect tax that was introduced in India on July 1st, 2017. The GST replaces multiple taxes levied by the central and state governments and aims to create a unified market for goods and services across the country. The GST is divided into 4 main tax brackets: 5%, 12%, 18% and 28%. Next, what is SST? SST stands for Sales and Services Tax. It is a consumption tax that is levied on sale of goods and services in Malaysia. The SST was reintroduced on September 1st, 2018 to replace the Goods and Services Tax which was abolished on June 1st, 2018. The SST is divided into 2 main components: sales tax and service tax. The sales tax is levied on the manufacture and importation of goods, while the service tax is levied on selected services. The SST rates vary depending on the type of goods or services and can range from 5% to 10%. That's all from me. We move on to Takif.
Assalamualaikum and hi. My name is Muhammad Takif bin Razif. So now I want to present to you about difference between GST and SST system. So the GST is based on the indirect taxation system, which is single consumption, and SST is levied on goods or services provided to both locally produced and imported. That means GST is broad based consumption tax applied to a wide range of goods and services, including imports, with multiple tax rates and a multi-stage structure, while SST in a narrow tax on specific good and service, including imports, with a single tax rate and a single stage structure. Point 1. So now I will present to you about the second point of difference about GST and SST. So the GST is the tax base is the national market, and the SST is the tax base is the local market. That's mean GST is a tax that applies to goods and services consumed nationwide, including local and imported items. SST is a tax focused on goods and services consumed in a specific jurisdiction or region. So the next point is GST is the tax levied at multiple stages, and the SST, while SST is levied at sales point, which is GST is collected at multiple stages of the supply chain, where SST is collected only at the point of sale. So the last point is eligible to claim input tax if exports are rate 0. So for SST, no complete tax relief. So it's mean for GST, business can claim input tax credit, offsetting the GST paid on purchases against GST collected on sales. Exported goods or services are often rated at 0 tax, while in SST, there is limited or no tax relief or input tax credit, resulting in a higher overall tax burden. So I think that's all from me. Thank you.
Next, I'm going to talk about benefits by not reintroducing the GST. Lower cost of living for general public in Malaysia. The GST was a tax levied on goods and services, which increased the cost of living for Malaysians. By not reintroducing the GST, the government is helping to keep price low for everyday items, which is beneficial for general public. Next, not reintroducing GST will also stimulate consumer spending. When consumers have more disposable income, they are more likely to spend money, which can stimulate the economy. By not reintroducing the GST, the government is helping to keep price low, which can lead to increased consumer spending. Due to the fact that GST is a broad-based tax, it will affect the majority of Malaysians who do not already file tax. As we all know, the GST is a tax on goods and services that everyone has to pay when they buy things. Because it is a tax on so many things, it affects most Malaysians who buy things even if they don't usually pay tax. If the government doesn't reintroduce the GST, it can help keep price low for everyday items, which can benefit most Malaysians. Drawback not introducing GST. The Malaysian government will lose a substantial source of income. The GST was a significant source of revenue for the Malaysian government. By not reintroducing the GST, the government will lose a substantial source of income. This can make it more challenging for the government to fund public service and infrastructure projects, which can impact the overall economy. Dr. Apurva Sandi says that the GST within a country's tax base and brings in more revenue. The GST is a tax levied on goods services, which can help to broaden a country's tax base. By taxing goods and services, the government can generate more revenue, which can be used to fund public service and infrastructure projects. So, Dr. Apurva Sandi is correct in saying that the GST can bring in more revenue. Last, the decision not reintroducing GST could negatively affect the country's credit ratings. When the country's credit rating decreases, it is harder for government to borrow money. The decision not to reintroduce the GST could lower the country's credit rating because the government is losing a significant source of revenue.
Assalamualaikum, my name is Adam and I will explain which system should be practiced in Malaysia. From our group opinion, we think that GST system should be practiced in Malaysia. There are a few reasons why GST system should be practiced in Malaysia. Firstly, it will lessen the government's reliance on income taxes. GST is a consumption tax, so that the amount of tax paid depends on how much people consume. This means that even if people earn less, they will still be taxed if they spend more. This helps to reduce the government reliance on income tax. Second is GST generates almost twice as much tax income than SST. The higher collection of GST than SST resulted in higher revenue because it comprehensive and more transparent, as well as reduced tax erosion and leakage. Third is GST can be utilized to increase the tax system effectiveness. GST is a broad-based tax that is applied to most goods and services. This makes it easier to administer and enforce, and it also helps to reduce tax evasion. By increasing the efficiency of the tax system, GST can help to increase the government's revenue and reduce the tax burden on individuals. It is also safe-billing. Safe-bill invoice is an arrangement between an GST-registered supplier and a GST-registered customer in which the customer prepares the supplier's tax invoice and forwards a copy to the supplier. Then, GST implementation lowered the service tax from 10% to 6%. Lowering the service tax from 10% to 6% will reduce the amount of tax revenue collected by the government. This could lead to a decrease in government spending, which could have a negative impact on the economy. However, it could also lead to a decrease in the cost of service, which could stimulate consumer spending and boost economic growth. Next is increase global competitiveness. Price of Malaysian exports will become more competitive on the global stage as no GST is imposed on exported goods and services, while GST incurred on inputs can be recovered along the supply chain. This will strengthen our export industry, helping the country progress even further. That's all from me. Thank you.